All right, guys, welcome back to the channel. Today, we're looking at Bitcoin, the changing structure when it comes to the Bitcoin bull market, and a caution here and a warning on how this particular period of the market plays out and how most miss out on the opportunities, but more importantly, how not to get destroyed at this stage of the market. I'm going to get into that in just a moment, but of course, we need to get into the traditional markets, looking at the stock markets and how everything is progressing in the real estate cycle. So a few updates there first before I get deep and heavy into Bitcoin, and then a look at the total altcoin market cap with what's going on this week with the volatility. And then I'll get into what I think is happening for Bitcoin and that changing sentiment and that shift when it comes to trading in this type of environment. This week, we got volatility. We can check it out from the Forex Factory website. Just looking at the announcements or the data, economic data that comes out from the US basically every single month. And essentially, it's like the most important thing to look at for the week until the next meeting. So personally, you do you, but this is not something that I put a lot of attention to. The only thing I look at here is it gives me a reason as to why maybe the market's not moving as much as you would expect it to when you lead into some of these announcements. And you can kind of tell that some of these announcements are coming and the market's like waiting to see what happens from that announcement. And on a short-term basis, that has volatility, but in a longer-term sense, the trends are going to do what the trends do. And that's what I've noticed over many, many years trading in the markets. This is just short-term blips in the overall cycle, in the overall trend of where the market is going, regardless of high inflation, low inflation, high interest rates, low interest rates, high PPI, low PPI, CPI, you name it, it's the same thing over and over again. And of course, that's how I trade the markets. You guys can do whatever you wish. That has worked for me. And I'm just sharing with you what I have learned over the course of time to hopefully save you some time. PPI is up this week, CPI is out this week, core CPI is also out this week. So you're going to see some of the market either leading up to that pause and wait to see what's happening into that news announcements, as we can see from the S&P 500 and the NASDAQ, Dow Jones also similar as well. And then once you get the announcements, you'll see some sort of potential volatility in that move, and then the trends continue from that. Now over to the stock markets, again, another so-so green day here, basically flat, let's call it that. But the trend is your friend, trend is up. And I want to just take a quick look back here as a pattern for these lows coming into the market. Hopefully you can use it for your own trading and your own analysis. Check out how this bottom formed. It hit 50%, down on the 50% level, corrected. In this case, a higher low, but the Dow Jones had a slightly lower low, but a higher low on the macro there, or the longer term time frame. We'll get to that in a moment. And then the power move away, the breakout of the 50% level. So far, so good. Even if this is to correct from this point, we've got now two key areas. You've got the low and then the higher lows to watch out for a correction. Breakdown of these levels would just mean that it could take longer to get back to those highs. If this corrects, holds above those, well, then that's a stronger market again. So S&P 500 looking relatively healthy. The NASDAQ also looking relatively healthy. You can see the same pattern here, higher lows forming, breakout of 50%, breakout of that top. That's what you want to see for some strength. Note that the volume is dropping off here as the market heads higher. Can be one of two things. Bit annoying, I know that, but at least if you understand it, then you can put it into your toolbox. A rising market on lowering volume can mean that the supply is drying up and there are still buyers present. So there's not as much supply on the market. The market's still going up, which means there's still demand out there. So far, we've seen a healthy recovery from the S&P and from the NASDAQ. If you remember back a month ago, this was looking quite fearful. Everyone was out of their minds thinking that this was another turn in the market, that things were about to get pretty damn ugly and we're about to head back down past the old all-time high. What I recall is that there was less people talking a big bearish game at that time than what there was back in October 2023, than what there was back in March of 2023, and then October of 2022, which was this low here. What that signals to me is that more players are getting more bullish on the market. And although they've missed out on all these levels, they're starting to come to grips with the overall bull market, which then tells me in a longer term time frame here that we're coming towards the end of this move. We've looked at the 18-year cycle, basically over the next couple of years, probably higher prices. That's where everyone starts to get really damn bullish that this thing can never go down. That's a time to be fearful. So we might be in the middle of that transition now, at least for the traditional markets, where many are coming to grips with the bull market, but they're all in this hope that the market is going to eventually go down and they get to set their position again, which we've talked about typically doesn't happen, which typically, I know it's always typically because there's no guarantees here, but typically leads to single-digit corrections. And on that note, here is your single-digit correction, 8.5%. It happened, now it's bounced back. Single-digit corrections are most common in bull markets. You get some double digits and sometimes over 20%, but the most common is single-digit corrections. Dow Jones had that slightly lower low, but is now pushed higher again, pushed above 50%. Now over to Bitcoin and the traders warning here, the caution when it comes to either trading these markets or trying to get set in positions from here. Now I'm going to cover quite a few things here pretty quickly. Pay attention. We're looking at this from the point of view of traders and longer term investors, or if you're looking to get in here and then hold it for this next stage of the cycle, whether it's 6 months, 12 months, 18 months, I'll let you be the judge of that. But in this period, you can see that there is no clear trend. Now, if I bring up this chart here, there's a few rules to go through. Know the 80-20 rule. The 80-20 essentially means the market does nothing for about 80% of the time and then moves for the other 20% of the time. You can see that pretty evidently here. That was 7 months of basically sideways, except when you're in the market, it feels like something's happening all the time. There was 2 months down, there was 2 weeks up, there was 2 months down, and then we started to get this high low. It was basically a 7-month period until we got a clear trend happening. And then the clear trend pretty much lasted from mid-October until early December. And then essentially it went sideways again. But again, within that period, it was a lot of chopping and churning. Unless you're a short-term trader, you can make money from that provided there's volatility. If you were a long-term position holder trying to set your position and hold it for the longer term, it can be pretty tricky because you're holding into these moves after you've seen it move for 6 weeks. Now you've got 6 weeks of nothing, basically just sideways grind. You might be making 10% up and then 15% down and then another 5% up. So it gets pretty nasty for your psychology as a position trader here. So that's the first thing. 80-20 rule, hang in there, don't get wrecked. So that's for the longer terms. If you're a short-term trader here, because there's no clear trend, then your positions get chopped up. So unless you've got a way to identify the trend, I use the Gann swing indicator, link to that's in the top of the video description, then it's going to be hard to identify what's happening next. Right now on the weekly, trends are down. You can see those lower highs, lower lows, but eventually this has to change and then start to move to the upside, put in an uptrend. So unless you've got a way to identify this trend, personally, I would probably stay out of the markets. If you've got a longer term view and you just see this as one big trend, one move up, a correction, and then you've got a view that's going to go up from this point, well, then you can easily start to get your position set. And like I said in the intro, I've got something for you as well. This is setting your positions, looking at a pyramid, understand how to set your positions up. Basically, set your portfolios up in the right way so that you don't fall victim to the same old crap that happens every other cycle, buying and selling without any sort of plan, and basically giving it all back to the market. We've looked at the choppy periods for BTC at this point in time. You can see it on the chart, the trends are a mess. They're chopping traders in and out, breaking tops, breaking bottoms, losing volatility, basically ranges contracting, which makes it very difficult to trade in. And then all of a sudden you get some pumps out to the upside. So if you are looking for something clearer, cleaner, getting rid of all this other data, then look for a break of $65,000, $65,500. That is the key next level. It hasn't changed yet because the low has not changed yet. You can see it bounced off the weekly swing low here, 56K, 56.5K from that top. That's why 65,000 is the next. Thanks again, guys, for joining us on the channel. Like and subscribe. I'll see you back here at the next one. Till then, take care.